Hi everyone, welcome back to Corporate Decoder, where we unravel the hidden stories within company filings. Today we're diving into Xoma Royalty Corporation's 8K report. And let's just say there's a big deal being announced that could change how we see this company. Stick around to decode what it all means. So Xoma Royalty Corporation, they're involved in the world of healthcare and biotech, essentially owning rights to future royalties from approved pharmaceutical products. Think of it like owning a piece of a song and getting paid every time it plays, but for life-saving drugs. This particular filing in 8K is like a public announcement for significant events that shareholders need to know about right away. It's not a regular checkup, it's more like an emergency bulletin. And the earliest event reported here is August 11, 2025. That tells us something important happened on or around that date. Now, every company has its basic building blocks, and for Xoma, that's their common stock. You can trade this on the NASDAQ under the symbol XOMA. It represents ownership in the company. They also have preferred stock. Imagine this as a different class of ownership. Preferred stockholders usually get paid dividends before common stockholders, and it's a bit more stable but often doesn't come with the same growth potential. Xoma has a Series A preferred stock that pays a pretty good dividend of 8.625%. And then there's Series B preferred stock, which is offered in smaller chunks called depository shares. This one pays a slightly lower dividend at 8.375%. These different types of stocks show us how Xoma finances its operations and grows. The main event in this filing is under item 2.0, which signals a significant change in the company's assets. Specifically, it's about the completion of an acquisition. Xoma has completed a deal to buy another company, Turnstone Biologics Corp. This wasn't a small handshake deal either. They first made a tender offer, which is basically a public invitation to buy shares directly from the existing shareholders of Turnstone. The offer was a mix of cash, 34 cents per share, and something called a contingent value right, or CVR. A CVR is like a bonus ticket. It means Turnstone shareholders might get additional payments in the future if certain milestones are hit, like specific drugs getting approved. This is common in biotech deals where future success is uncertain but potentially very valuable. The tender offer period ended on August 7th. They needed a certain percentage of Turnstone shares to be tendered for the deal to go through, and the filing tells us they got enough. In total, more than 17 million shares of Turnstone were tendered. That's a substantial amount, representing about 74% of all Turnstone shares. This high percentage shows strong support for the deal from Turnstone's investors. With the tender offer successful, Xoma then moved forward with the final step. On August 11, 2025, the merger officially closed. This means Turnstone is now officially part of Xoma. The separate existence of Turnstone as an independent company has ended, and it now operates as a subsidiary of Xoma. The way this merger was structured using a specific part of Delaware law means they didn't even need a vote from Xoma's shareholders. This is often done for speed and efficiency when a tender offer has already secured majority control. The deal also addressed how Turnstone's employees and executives would be treated. Their stock options and restricted stock units, which are like promises of future shares based on performance, were handled according to the deal terms, often involving early vesting and then conversion into the same offer price as other shareholders. It's important to note that some of Turnstone's stock options were cancelled without any payment. This can happen if the option's exercise price was higher than what Xoma paid for the shares, making them worthless in this transaction. Beyond the acquisition itself, item 8.01 covers other events. In this case, it's about Xoma's official announcement of the deal's completion. They put out a press release on August 11th, the same day the merger closed, to make sure the public and investors knew the news. The filing also lists important exhibits that provide the nitty-gritty details. Exhibit 2.1 is the actual agreement that laid out the terms of the whole merger, signed back on June 26, 2025. And Exhibit 2.2 is the agreement for those contingent value rights, the CVRs. This document spells out exactly how and when those future payments might happen for the former Turnstone shareholders. Finally, Exhibit 99.1 is that press release confirming the merger is done. It's all about transparency and ensuring everyone is on the same page. And down at the bottom, as with all SEC filings, you have the signatures. People like Owen Hughes, the CEO, signing off to confirm that everything in this report is accurate to the best of their knowledge. This is dated August 15, 2025. Now let's put on our investor hats and look at what this means. Xoma acquiring Turnstone is a big strategic move. Turnstone is known for its work in oncology, particularly with immunotherapies. This acquisition likely means Xoma is betting heavily on Turnstone's pipeline of cancer drugs. They're essentially buying potential future revenue streams. The offer of cash plus a CVR is a common way to bridge the valuation gap between a buyer and seller when the future is uncertain. Xoma is giving a guaranteed amount upfront and then offering a sweetener if their acquired research pays off. For Turnstone shareholders, it's a mix of immediate cash and a shot at more if the drugs they help develop become blockbusters. From Xoma's perspective, this is about expanding their portfolio. If Turnstone's therapies are successful, Xoma's royalty income could significantly increase. However, drug development is a long and risky road. Many promising drugs fail in clinical trials, so the value of those CVRs is highly speculative. Xoma is essentially taking on that risk, hoping for a big reward. We don't see specific financial tables in this particular 8K as it's focused on reporting an event. Not the ongoing financials like a quarterly report, but the impact of this acquisition will be felt in future financial statements. We'll need to look at their upcoming 10Q or 10K to see how Turnstone's assets and liabilities are integrated into Xoma's balance sheet and income statement. One key thing to watch will be how Xoma manages its debt and cash flow to support this acquisition and any future drug development costs. They've also got preferred stock, which means dividend payments on that preferred stock need to be covered, which can place a strain on cash if revenues aren't growing fast enough. The strategy here seems to be growth through acquisition, specifically targeting promising areas like cancer therapy. Xoma is betting that by acquiring Turnstone, they're getting a ticket to future billions in drug royalties. The risk is that the drugs don't pan out, making the acquisition a costly misstep. To sum it up, Xoma's just bought Turnstone Biologics, adding potential cancer drug royalties to their portfolio. It's a bold move that could pay off big, but it's also loaded with the typical biotech risks. We'll be watching closely to see how this integration plays out in their future financial reports. Alright, that's our breakdown of Xoma Royalty Corporation's latest filing. What's your take on this acquisition and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching, see you next time.